All right, all you devils out there, happy Friday. Sam here with you. Oh, it's a little after 1 o'clock on the 26th here. We'll get an update here on Bitcoin. Oh, now, of course, we've all seen the reaction to Chairman Powell's speech here in Jackson Hole. Risk assets, well, being sold pretty aggressively, right? So Bitcoin going with that. Now, I'm a little late here. It took me a minute to find what I wanted to go over here today, but I think we can pick up where we left off from last week, which is really, whatever's happening here, this is just a guessing game as to any Elliott pattern here. Could be three different things until we get resolution here, either a break higher or we're going to take out the lows here. I don't even think it's worth it. We won't know until we get more information. But I'm really doing this almost without any Elliott here. Although it is hard to miss what here we have this from our swing high here, our biggest retracement here. This is a pretty solid looking impulse, right? And all the swing relationship, it's just spot on, right? You couldn't script it any better. Oh, just to quickly, I can't even remember if we reviewed some of this, but if I'm here to the 2 here, well, we got a wick through here, but we're pretty close here. If I get that right on it here to the 1618175, 175, yeah, we got some wick through that. All right, first pause is at 38, and then we went down here to the second window. But now if we go down here and we look at the 4, I get that right on the 4. So length of the one from the 4 here, we're coming just shy of the 1618 on the 5th. Kind of doing it that way, and then additionally here, if I go from the 2, looking for from the 2 through the proposed 3 pivot here, we come literally exactly to the 38 ticket where we put in this little ascending triangle. I guess you'd A, B, C, D, E, and then come out over here with a ripping impulse here. So you've got this nice looking impulse here, which, okay, does it look great here right now? Well, no, it doesn't. But we certainly, if we're just going to stay with traditional chart pattern analysis here, which is perfectly valid, right? I mean, don't ignore these, right? I mean, they've become classic for a reason. So here we've got an ascending triangle channel, ascending triangle here, and then a little wedge here. On the larger degree, the only bullish pattern here that we could lean into at all is this falling wedge here that ends with this nice impulse. Now, as we come out here, now sadly we get a bearish wedge, which is now broken. And as we sit here, well, okay, it doesn't look good at the moment. We're sitting in the last, within ticks, I'm on an 8-hour here, of the last demand zone here. But take note where we are. Oh, come here. Let's get you off of there so I can get that pivot. Right? I'm sure, well, of course, members have all done this. Let me get this right on here. Let's get back to measured move here. So as we sit right at the golden zone. All right? So swing high, swing low. We know an algo is going to fire there. Doesn't mean it holds. But go if you've got access to an order book, I think you'll spot that there'll be buying activity there. Now, as to whether it holds or not, well, it certainly doesn't look great. Well, one, we get this rising wedge here that breaks. Oh, you could do some projections down here to heading us down 15 to 12. If this is going to break, it's hard to not look at this and say, boy, it sure does look like we might have a kind of a fat 4, but going down for a 5. So trying to end a 5 here. Right. So I mean, this would be unusual that if we got a big extension here in the 5th. But if we're just going to finish here, and of course you all will be right watching to see if we break the golden zone there. Okay. So what could that be here? Well, if we were looking for a pivot here, this would have to be part of something along these lines here to be corrective. So we'd be looking for the high here. Can you wedge some sort of a diag in there? Well, I'll if you pass me the hopium pipe, I'll take a hit on it. But this might be pushing a little much here. Well, you kind of do the same thing right here. So if we start doing this and then put we kind of do something like this, right? I mean, you can we'll give it that right there. You can kind of nudge yourself into thinking, okay, well, it's not a crisis. We're not going to free fall. what's here, right? So if you were looking for a trade, oh shit, where'd you go? Is it here? Yeah. All right. If you were looking for a trade, right? We're just looking for a first target. Is there a trade here? I'd probably use 707. Given the, oh shit. I have a second line and it gets spam. Sorry about that. Anyway, is there a trade here? Well, yes, right? I mean, you'd be playing purely off of the algorithm, right? So go over to the order book, take a look here. You know, do you want to just buy it there? Well, shit, you could, right? I mean, your risk is pretty small. What do you got there? Is 9-1. Okay, but wouldn't you rather like to see some signs of some sort of a strength here? You know, maybe you get a change of character here, and then we come back, retest the demand zone. Okay, maybe we're coming out of there. Right now, well, I'd want to see the reaction first, right? You don't have it. Now I'm on an 8-hour, but you know, does it look like a bullish pattern? You know, maybe a stretch there. But here's what I would say with absolute certainty: this would not be a great place to be selling the market, right? I mean, I guarantee you people will sell it there, right? Because they don't know that's there, right? They don't know that's there. Now we'll see, right? If we're going to fall, we're going into the weekend with a negative bias, with the traditional assets all getting absolutely crushed today. Bitcoin's down 1,000, a little plus. Okay, are we really thinking this is 1-2? Well, what can we say definitively? We have a swing, we have a retrace at the golden zone, right? So would we not have a potential golden corner? Yeah, we would. Yeah, we'd have it. Let's get this original recipe, right? Would you have it? Yeah, you would. Do you have 80% probability there? Yeah, you do. Do you want to take that trade? Well, I leave that up to the individual. I'm not taking that, but I'm plenty long, right? So I don't see enough here in the upswing, even though it's higher highs, higher lows. All right, we do get an uptrend here. This reaction here. Oh, what you'd hope is that this is going to be a 5. Maybe we hold the golden zone, and then we're going to do something like this, and then we're going to come down again. Now, okay, right? Are we again back to pass me the hopium pipe? Are we hoping that we don't break that pivot, and then we're going to go? Well, we're going to need a catalyst of some sort. Now, maybe the Ethereum merge does it. Maybe. Right? There's a lot of potential with that, right? It's all just potential at the moment. But right now, if you're staring at that chart, if you didn't know what it was, right, it would, I don't know that it would even matter, right? If you're just looking at that chart, does that say, "Oof, buy me"? Probably not, right? So certainly we know we want to end with a 5, but this not a pattern here we can look at and say, "Oh, it looks like we're done here." There's, Jesus, is there any way we could stretch that? Boy. Not really. So, okay. So now maybe if we were to come here, if we were to kick out of here, right? Algo fires and we start to get some traction, maybe. But there's so much resistance above that I think a couple of things we can look at here. Don't feel like, oh, I'm going to buy it here because if it rallies here, I'm going to miss it. Boy, is there a lot of resistance that we have to get through going above. So let's look at some of that. Okay, acknowledging here that we are at a technically significant level. There is this a low risk trade here. I mean, it's there, right? It's wait. So I'm not saying don't take it. I'm saying, take it with a tight stop. Right? So we say it that way. Okay, let's focus in on what I wanted to show you here, because if the Elliott is elusive, right, there's a couple of things we can do. Well, one of them, I'm doing it right here in front of you, right? Let's look at some traditional chart patterns, right? If as you will, or let me call them traditional. Let's call them classic TA, right? We'll go with classic. All right, as we sit here at that golden zone, which would be contemporary TA. Wedge, right? Could we wedge out of this? Well, again, okay. Let's see if this holds, right? Again, we have the confluence of the demand zone and the golden zone to lean on. Right now, let's see that reaction come out of there. Okay, but a couple of things. No, just looking at this. As you look at it, if we focus down here, let me get it back to center it. It's kind of hard not to spot that if I look here, let's see if I can do this with the with that. If I go up, looks like we're about equidistance there. I mean, maybe within a tick or two. I probably wiggled it a little bit. Well, that made me start to think, right? So first, right, just as my habit, if the Elliott is not clear, well, of course, I'm always going to look, what are the algorithms doing, right? That's what moves the market, right? It's not you and me, and it's institutions, whales, right? If we in crypto, we can call them whales, right? Because we don't. It's not necessarily institutions moving, but it certainly could be. So we got to look for what are the institutions, what are the algorithms doing? Because that's what moves the market. It's not why it moves, it's how it moves. So I started digging in here, looking at this relationship, saying that looks like this might be consistent. Of course, now we've looked at this before. I've shown you this before, and so I'm going to switch over to the Wolf tool, and we're going to go up and down here. And this is you can replicate this. Oh, now one thing to note: I am in arithmetic. I'm not in log scale. All right, I've condensed the range here for this kind of analysis. It wouldn't work as well in log scale here. But so all I'm doing, right, when you're working with the Wolf range here, we want to look for where I'm seeing precision, right? Because we human beings, right, we're not this precise. But we note here 100 and the 300 are to the tick. Right, so I know there's likely an algorithm participating here. So when you see it like this, so of course, if I went here now and I started expanding, well, now the 100's going to be right here, right? Because we saw that, right? So now I'm just going to keep going, and I'm going to come and bring down here till I get to the 200 here. Now let me get the 50s on here. Oh, let's do the Wolf 50. There we go. Okay, so I can look here and say, okay, this is interesting, right? So I essentially what I'm doing is I'm quartering everything. So I see down here at my next 100%, because now I've expanded the range because I had a perfect hit here. Well, I get this consolidation at the 50. Now I've got a target down here. So if this is going to break lower, and we're going to break this golden zone, break this demand zone here, and we're coming down. Well, here's a reasonable target here, 15,654. Now, how would that play with the Elliott count? If we were going to come down here and challenge this, well, of course, this would have to move over. Then we're reconsidering the entire count, right? Does this become the 3? This become the 4? That still is a little, it's not ideal, right? We're going to put the 1 here, the 2 here. Okay, it's not possible. We get the big extension in the 1. We get a shorter 3, but of course, we're going to have to pay attention to the 5, make sure the 3 is not the shortest. Oh, let's just measure that real quick, just because if we get this here and we look at where the 100 would come in here, we'd be down here at 11, right? So if we break here at 15, that's the next thing you'd be watching for is, okay, is the 5th, we can be 1 tick in front of it, but we can't be, 3 can never ever be the shortest. Okay, so let's get that off of there. Okay, so I got potential confluence points down here that I'm looking at going, okay, well, if this, since we've broken this wedge pattern here as a candidate for the 4, now again, we don't know for sure. We don't know for sure that's the 4, but right now just looking at it, path of least resistance is down. All right, is that where we're going to get it? All right. This is a much better looking impulse. So the alternate would be, okay, well, if we completed an impulse here, could this just be a shallow retracement before we're heading much lower? Well, I can't rule it out, right? No way to rule it out. So let's look down here, because I think there's a little bit more here to give us some conviction into this pivot here, to where, if nothing else, if we're going to come down here and test this, I think this, it's too soon to give up on this as a good pivot. Now, note here as we start to look at the ranges here, I think you'll see this in a second, but this is, what was our low here? 17,716, right around this, in the 17 and change. Well, let's look at this. So now having identified here, and we've got this candidate down here at 15,572, let's take that one off on the way down, and let's start looking about, are there any other relationships in here, the algorithmic patterns that we can identify that might give us clues as to where we're headed next? Well, let's just kind of try and tee them up here. So, here's the first one. Okay, so this is the one we looked at a minute ago, where essentially all I've done is I've just taken this range, I've gone down exactly 100%. All right, so here's the 50%, right, which is what we rallied to the tick, right? So we're coming down here. Here's the range. We expanded 100%. We come back, right? Now this is a perfect example of prior support becoming the resistance. This is not a supply zone. That's an entirely different thing. This is resistance, right? That's a price point in the market where the market reacted. That's not a supply zone, right? Big difference between those two. Well, you look here and you go, okay, well, that's kind of interesting because I've got this range here. I go up exactly. Or you might say, I've got this range here where we came out of the 4, or this little ascending triangle. We come down here, we get the 100 within a tick, which is within a tick or two, back to where we started it. Now let's go, let's look, because I'm looking here, I want to see, well, was that consistent going up? So let's go up one. Now, let's take a look at this. Here, I guess we can pull that out of there. All right, so because you essentially got it right here. Okay, so now I'm going up. Well, now I'm going here, I'm going 100, now look at 200. Right, do you start to see what's happening here? So again, 0, and I mean emphasis 0 possibility, that's random, 0. This is all computers doing this. So we've got this nice quarters. We're essentially all we're doing is cutting everything in half. So here's the range, cut it in half. Here's the range, cut it in half. Here's the range. Well, oh shit, I don't have a 50 on there, but oh shit, I could do it here. I could do it like this, right? Another way to do these, right? So there's the 50 as we sit now, having just broken underneath it. So where's the next target? Well, we can look here and say, oh, that's one. The other is a double bottom here, right, at the 100. We come back here and double this. Do we want to count on a double bottom? Well, certainly it happens, right? Okay, we know there's a bunch of stops down there. So to see that liquidity grab and then turn is certainly possible. Certainly possible. It hasn't happened yet, so let's not fill in the blanks until we see it actually happen. If we're breaking here, where would we be looking next, right? 10,000, right? Assuming, right, this algorithm is going to keep moving the market here. So, I mean, do you see how this here is on top of this one? These are so precise, it's actually hard to believe it. Again, that's why we know it's an algorithm, right? There's no question about it. So if this is going to continue, we're going to go down, and we're going to go down another 100. Well, now we're looking down here at 10K, which, again, we cannot rule that out. What's that going to do to the Elliott count? Well, let's cross that when we get there. In the meantime, here, we're what you would call critical support. You'd want to see that hold if you're long and you're a bull. If you're short, you're just sitting here going break it, break it, break it, because they're gonna, what's next up, right? All the stops that are sitting right there, right? That will be the next. So don't be surprised though. I mean, this is what you want. This is why you never, ever, ever want to sell right here. Right now, if you want to sell it, the place to sell it was up here. Right now, fuck, I know that's in hindsight, but you just, again, trend channel breaks. You don't have a great looking impulse here. That you want to be selling here on something simple there, like this wedge break, with a target down here. To enter here is always a bad idea because you're vulnerable to that, right? Because it happens all the time. I mean, all the time, right? But whales, institutions, large traders know, right, that retail is going to stop in there, right? They're going to look, oh, well, let's just take the break alone. Now, that's not to say that couldn't break and go, right? It's never what I'm saying. I'm just saying, why make yourself vulnerable by entering here? That's not the place to enter. You want to enter up higher. You maybe look to take a partial here because as a result of that, the risk, you don't know what's going to happen here. You're very vulnerable to a double. It could break and go. But if that's the case, you want to be long going into it with your stop tightened up. You know, maybe you put your, oh shit, come here. Maybe you put your stop right up here, saying, okay, if it kicks back, well, I sold it here, so I've made some money. If we get the kickback there and they just grab the liquidity and then rip it up, right? Then you're not hurt. One thing I can promise you, right? If you sell it here, you're going to be uncomfortable, right? And that, you don't want to be stressed and you're checking the market all the time. You don't enjoy your weekend. I don't know if it gets you over the weekend, but you're in that constant like, oh fuck, what should I? Oh, I better check the market. Oh shit. Oh yeah. Oh, I wanted to go out, but I can't because you're constantly worried about your precision. Takes all the fun out of trading, right? So it means one of two things: either you traded too large, you put too much size on, or you traded at a location that was suspect, let's say it that way, right? Well, you're vulnerable. Let's put it that way. Okay, let me get you out of there. I always think these are going to be shorter than they are. Okay, so let's see what else we can build into the confluence point down here. Well, let's go to, what else do I have here? So let's go with the trend-based fib extension. right? So what I'm looking for down here is confluence points. So if we're going lower, I want some targets. Okay, where can I start to look for a reaction? Well, obviously the first one here is the double bottom. Now, if all I'm doing here is taking the swing length here, I'm projecting from the retrace, right? So here's the 618, pretty damn close to the, I mean, within a couple of ticks of the 100. So here's the 100. So I'm kind of looking down here going, all right, well, I can see I got some fair value gaps here. I've got some, all right, because I can just see from this, right, that we had imbalance there. So I've got this zone down here. If I'm coming down for that, coming down towards 10K. All right, if that's what we're doing. Okay, so I got a potential confluence point here. So if we're going to come down here, well, all right, so again, I'm just splitting that. Well, what else is here? Oh, let's here, fib retracement. Okay, so looking here. So all I'm doing now, I'm taking this distance right here, and then I'm doing the retrace coming down, right? So I'm coming down. Well, obviously this would be 100%, right? Here's 200% right here, literally to the tick. Right, it's to the tick, right? So from here, so I'm taking, again, this swing distance, I'm coming, here's 100, here's 200, right, to the tick, right? So note here now, so I've got the expansion of the 100% expansion, the wolf range, right, as I call it, is hitting here, as is the retracement, right? So it wouldn't surprise you, right? The 300 and the 200 are hitting exactly at the same pivot. There is, as we looked here, there, in addition to the count from here coming down, there's a 5 that would get you done here. The problem is here we didn't get anything good looking here, and now with that sell-off, it's looking pretty ugly. Oh, let's see. Do I have everything in here? Oh, well, we put the moving average on here. Oh, where is it? I thought it was on there. Did I hit it? Yeah, there we go. Okay, so this is. Oh, I've just been using this lately, right? It's just one line instead of 3. It's very close to the Vegas wave, the God MA, right? It's the average between the simple and the exponential. It's a good reference point. So we're kind of flirting with it, right? Obviously well below, but kind of flirting. Now you'd want to see, right? If you're just using for trend, right? You'd want to see it get above trend. Let's take that off here just to keep the chart clear. And then let's put a set of median lines here. I guess we can kind of do it like this. Oh, we can probably take that off now that we've got that. So now let's close this up here. So I've got, right, some pivot, right? I've got all these nailed down to the tick. So here's our shift modified, pardon me, it's our shift pitchfork, right? So note here as we come down to we tag these pivots here as we get to the lower median, retrace, right, again, back to this pivot here where we run back into the median line. Note how the median line has been resistance. So until we get on the other side of that median line, we've got to get something here that kicks us up towards this, right, where we're going to run into that resistance. Right, but again, here it's going to be up exactly 100%, right? If we can get on the other side of this, I got to get up 200, right? So now from here to here, and then I got to get here, and then I got to get here, and then I got a lot of work to be done to climb back up out of the hole. So the point here is just looking for these confluence points. So you can see all the confluence here at this low here. Now, if that's going to break, where's the next target? Right, I'm getting some decent targets here. I don't have, this is a 38, so there's really nothing here unique other than also note the downsloping parallel would be coming in down here at 10,296. So if that's where we're headed, if this is going to be if this is a 1, 2, 3, 4, 5, oh shit, here, let's work on my draw there a little bit better. Something like that. Wouldn't surprise me. I wouldn't be thrilled about it, right? Being very long Bitcoin, but my view is I don't worry about it, right? I've just, again, 3 to 5 years from now, I'm pretty sure we're not going to be at 10,000. Now, of course, as my YouTube commenters are quick to point, I've been saying 3 to 5 years for a long time, right? So I remain as bullish as ever. As we go through crypto winter here, you're either maintaining your long-term belief in the revolution of crypto, or you've bailed on that idea long ago. So I get no shortage of comments, people reminding me that I've been bullish. Well, I've been bullish for 5 years, right? So through up, down, I remain just as bullish because behind the scenes, the infrastructure continues to develop and grow. Massive amounts of money, massive amounts of intellectual capital are going into building this system out. This infrastructure, that's a better way to say it, infrastructure. Again, what's your time horizon, right? So if you've got a long-term time horizon, these are something simple like this. If we were to break down here, I wouldn't shy away from some accumulation if you can park some money there. If you can park some money there, you could start here. You could start where you are. If it's going lower, what are you doing? You're dollar cost averaging, right? So that's not for everybody. I'm not saying everybody should do that. If we come down here and push down here, I'm going to continue to be a buyer. If we come down towards 10, I'm going to be buying aggressively, right? It's just, but that's me. That's not right for everybody. So I think what I've tried to do here is just give you some target zones down here. But before we just assume we're going here, let's wait and see what happens here because we're sitting at critical support. Now, Fridays going into the weekend, always a bit of a crapshoot, right? The liquidity, volume dries up, right? So it's easier for those that want to move the market to move it. Again, right? But just as easy for a whale to step in here and crank it up. So we do this, right? It's very natural, right? For a trader to just fill in the blanks, right? In your mind's eye, you're filling it in. Oh, we're going to 10,000, of course, right? I can see it. As soon as you start really having a lot of conviction on where the market's going, I can almost guarantee you it's going to go the other direction. So keep that in mind. Stay humble, right? As I try to remind myself, as I have, there have been a lot of opportunities here where I was looking to be a buyer or have bought, right? And the market just keeps going lower. So, right? So what I hope to do here is teach. I give you my opinion. Since we started this retracement, right? Hopefully you get a few nuggets along the way, but I certainly have been wrong about how far down we've gone. All right. So all that said, and fully acknowledged, right? Haters, go easy. I'm not going to post your stuff anyway, or unless it's thoughtful commentary, right? So I have many talented Ellioticians who will give me comments about, Elliott counts, their ideas, their counts, but the people that just come and shit on it, I'm never going to publish your comment, so why take the time? Anyway, all that said, here we go. I got some new things we're working on for next week as we come into this. A few ideas, I think, to create more trade opportunities, some good ideas, and some product that I think will be interesting to you guys, to all of you guys. We'll see here if I can get that done. I'm going to try and work on that next week. And then as we come into next week, I think there'll be some new things to look at here. But just the basic TA we're doing here. You can see kind of a nice, what I'm trying to do is combine traditional with Elliott Wave with market structure. Right, we want to use these tools as we can, and then the wolf range here, looking for patterns of identification. Where do I see these confluence points? Because these are areas where you can look for a reaction that can set up a trade. Okay, with that said, let's keep the stops on the tight side here. That certainly is a high-risk place to be a buyer, but it's also a very low-risk place to be a buyer, right? So if you want to take a swing at it there, keep that stop pretty tight, and I don't think I'd be putting on much size there. My suggestion, if you're itching to be a buyer, right, or shit, even a seller, right, you could sell on the break here. Now you're selling, and it would be a double bottom, right? You're assuming the double bottom's going to break. Careful with that, right? So you're just as vulnerable here, right? To the because there's stops there. You're just as vulnerable there, right? So you don't want to sell it right here because how much room do you get? Well, shit. Well, you got $2,000 there. You got from 20 to 18. It's there, right? So somebody wanted to aggressively short it. Let it break the golden zone, right? And not just break. You want to see a bar close below the 65. Right, then you probably, I'd look for a little kickback here so I can get a better fill. So maybe if we go through and then there's any little kickback, maybe the 618 or even this 50% line here, if you look down there, right, this has been kind of an area, and then you've got a fair value gap. So if we do that, just look at an Elliott count. If this is a 5 and we're going to break the 65, we're going to break the golden zone. If I got any sort of kickback here into this fair value gap, if you're comfortable shorting, see, here again, this is, you don't want to short it here. If you can short it up here, okay, I got a supply zone up here. I'm in a fair value gap. I don't need to give it a ton of room. It's either going to roll over or it's not. And you could use the median line here, right? So if we got something into this area here, we can see while we've gone through. Shit, looks like you could work a trend line there. Looks like you could work that trend line right there as a sliding parallel off of the median line. So if you were to get a kick here, right, something like this, right, to hit that trend line here that's coming down. If you wanted to go for the short, right, you could do it with relatively low risk. Let's see what we could get there. All right, I wouldn't give it max. I would give it. Actually, I don't even know if I'd give it that much. Right, but right here, you'd have 3 to 1 if you're giving it through the other side of the supply zone here. I don't know that I'd give it that much. I wouldn't want to give it that much. If it were to kick up here and blow this out here, and we're going to go into I'd reevaluate here. I don't want to take that heat, because if it starts to go here, now I'm like, oh shit, I should have sold it here, right? I don't want to get in that woulda, shoulda, coulda. So if I take a trade like that, okay, what have I got there? There's 10 to 1. Oh, I might use something like this, that little pivot there get on the other side of that as a stop. Something like that. So 7 to 1 going for here's the target is the week low, right? The prior low. So come down here. Okay, 7 to 1, reasonable risk reward here. So I'm thinking about it. So 1, 2 is this going to be 3, 4, 5, and we're going down here to these lower targets around 10. 1, 2, 3, 4, 5. Certainly possible. Okay, guys, just a few things to look at, right? Don't shy away from just traditional chart patterns, right? I mean, again, they're classic for a reason. Okay, guys, with that, I'll wrap it up. You guys have a good weekend. We're back Monday with live stream, regular live stream. As I said, I've got a bunch of new things we're working on here to introduce to members, and we'll share them with YouTube subs as well. All right, you guys have a good weekend, and I'll be back for that live stream on Monday. Until then, you guys take it easy.